Welcome back to our channel. Today we're tackling one of the most heated debates in Canadian finance. Should I invest in an RRSP or a TFSA? Feeling confused? Don't worry. We're going to break down these acronyms and uncover which savings plan is right for you. Let's begin by understanding exactly what an RRSP and TFSA are and how they work. My name is Gregory Rozdiba and I'm the CEO of Dundas Life. We're a digital life insurance brokerage that has helped thousands of Canadians with their insurance and financial needs. Now, let's dive into RRSPs. RRSPs, or Registered Retirement Savings Plans, are designed to help Canadians build a nest egg for their future in a tax-efficient way. To open an RRSP, you need to be a resident of Canada and have a valid social insurance number. You must also have employment income and have filed an income tax return. How does an RRSP work? With RRSPs each year, you can contribute up to the lesser of 18% of your previous year's income or the annual contribution limit set for that year. This gives you the opportunity to reduce your taxable income and potentially put you in a lower tax bracket. One of the key benefits of RRSPs is that any income or gains earned within the account are not taxed until you make withdrawals. This tax-deferred growth allows your investments to grow faster over time. Now, let's turn our attention to tax-free savings accounts, also known as TFSAs. TFSAs are a popular savings option in Canada. They are registered plans that allow Canadians to grow their money tax-free. Unlike RRSPs, TFSAs are not limited to retirement savings and can be used for a variety of savings goals. How do TFSAs work? Contributing to a TFSA is very straightforward. Each year, there is a fixed contribution room, which represents the maximum amount you can deposit into your TFSA without facing tax penalties. The benefit of TFSAs is that any income or investment gains made within the account are not subject to tax. This means your money can grow faster compared to taxable investment accounts. Now that we understand the basics of RRSPs and TFSAs, let's continue the two and see how they stack up against each other. Contributions to an RRSP are tax deductible, meaning you can deduct contributions from your taxable income. On the other hand, TFSA contributions are made with after-tax dollars, which are not tax deductible. When it comes to withdrawals, RRSP withdrawals are subject to tax. When funds are withdrawn from an RRSP, they're added to your taxable income and taxed at your marginal tax rate. There are certain exceptions for the Home Buyers Plan, or the HBP, which allows you to withdraw up to $35,000 tax-free from your RRSP to buy a home, and the Lifelong Learning Plan, the LLP, which allows tax-specific withdrawals for specific purposes with repayment requirements. TFSA withdrawals, on the other hand, are tax-free and do not impact your taxable income. You can withdraw funds from a TFSA at any time for any purpose without tax consequences. Additionally, withdrawals from a TFSA create additional contribution room for future years. Another important factor to consider is the contribution room. RRSP contribution room is based on a percentage of your earned income, while TFSA contribution room is determined annually by the government and is not based on income. Generally, if you are a high earner, you will see more benefit contributing to an RRSP than a TFSA, since it reduces your current taxes and allows you more contribution room. However, even high earners can benefit from contributing to a TFSA after they max out their RRSP contribution room. If you're in a lower tax bracket, you may find little tax benefit of contributing to an RRSP. At the end of the day, both RRSPs and TFSAs offer unique benefits and tax advantages for retirement planning in Canada. RRSPs provide tax deductions and tax-deferred growth, while TFSAs offer tax-free growth and tax-free withdrawals. So, it is always better to work with a licensed insurance advisor, like at Dundas Life, to find the right investment options for you. Thanks for watching. Don't forget to subscribe. If you have any questions or need further assistance, reach out to us at Dundas Life. Take care, and see you in the next video.